And in our top business story, Etihad Aviation Group and its equity partner airlines will support 108,000 jobs across the US in 2016 and make a $10.7 billion contribution to the national economy this year. That's according to new research. Consultancy Oxford Economics also said EAG and its partners' core and tourism economic contribution to the US will reach $18.2 billion by 2024 and support 171,400 jobs in the economy. It added that in 2016, Etihad's core economic contribution to the US economy will be $3.8 billion in GDP, supporting 30,300 jobs. According to the study, spending by the 280,000 international visitors carried into the US on Etihad Airways flights during 2016 will also leave a considerable economic footprint and is estimated to contribute $1.9 billion in GDP, supporting around 22,400 American jobs. The report said that the US economy is further boosted by the impact of the operations and services of EAG's equity partner airlines. Together, they will deliver $1.6 billion to the GDP with a further $3.4 billion tourism contribution. In turn, they will support 13,700 jobs through their core operation, with a further 41,100 jobs supported through the tourism industry. The Gulf's only listed stock exchange, Dubai Financial Market, has reported a 60% fall in second quarter net profit on Monday as revenue fell. The firm, in which the Dubai government owns a majority through holding company Bourse Dubai, made a net profit of 53.5 million dirhams in the 3 months to June 30, down from 132.4 million dirhams in the same period a year ago. Revenues fell to 100 million dirhams in the quarter compared with 178.1 million dirhams in the corresponding 3 months of 2015. The market's main source of income is from trading commissions, and while the DFM did not provide a quarterly breakdown, the firm said the value of shares traded in the first 6 months of 2016 was down 32.7% year-on-year to 69.5 billion dirhams. Apartment prices in Dubai will continue to drop further in the next 12 to 18 months because of weak demand from institutional buyers and occupiers. That's according to research from FIDA Advisory. FIDA said apartment prices in Dubai declined a further 3.7% in the second quarter of this year, and villa prices fell by 1.1% compared with the first quarter. According to Jesse Downs, the managing director of FIDA, Dubai's residential market had been hampered by a lack of demand, both from institutions and occupiers. Property also became more expensive for buyers from key markets such as India, Pakistan and the United Kingdom throughout last year, as the dollar, which the dirham is pegged to, increased in value. A study published last week by the broker Land Sterling argued that Dubai apartment prices dropped by just 0.4% in the past 3 months, weighed down by price declines in secondary areas. Prices dropped by an average of 5% in Dubai Land and by 3% in Business Bay and Dubai Sports City. Meanwhile, prices grew by 2% in prime areas, including the Greens, Palm Jumeirah and downtown Dubai during the quarter. Prices also increased by 1% in Dubai Marina. FIDA said that gross yields for apartments increased to 9.7% as the 3.7% drop in prices outpaced a 2.2% fall in rents. Gross yields for villas compressed to 4.7% because prices declined by 1.1%, but rents fell even faster by 3.6%. Ras Al Khaimah has recorded a double-digit growth in visitor numbers and guest nights during Eid al-Fitr compared to the corresponding period last year. According to figures released by the Ras Al Khaimah Tourism Development Authority, 16,636 hotel guests were attracted during the July Eid weekend, generating 30,220 guest nights. These numbers represent 10.7% and 17.4% increases, respectively, on the same period in 2015. Hotel occupancy during Eid al-Fitr reached 86.6%, 10.6% higher than in 2015, while revenue per available room, or RevPAR, grew by 12.7% over the same period. The UAE market continues to be an important source market for Ras Al Khaimah's tourism growth, with 56.5% of guests staying in the Emirate during Eid al-Fitr being UAE residents. Indian, Egyptian, British and German visitors are also in the top 5 source markets during the festive weekend, totaling 18.5% of total guests.